Thank you so much, Doctor, for the introduction. As mentioned, my name is Jordan Owomugisha, and I'm a lecturer in the Finance Department under Faculty of Commerce, Makerere University Business School. And important to note is that I'm also an entrepreneur running several businesses. So when I talk about entrepreneurs, I'm part of the family, and the same problems that we face and the same trajectory that we need to take for us to improve and make sure that our businesses, because most of the times we start our businesses small, but our goal is always to make sure that we can grow these businesses and make sure that they reach a level where they are sustainable, because even when a child is born, the child is taken care of, but at one point is expected or she's expected to grow to a point where they can become sustainable and even contribute value to the society and to the parents that gave birth to them. So today I'm going to share about the topic, the common financial mistakes that us as entrepreneurs usually do, and they keep our businesses small. And this is under the Become a Better Entrepreneur series, organized by the Entrepreneurship and Incubation Center at MOBS, every Thursday in the morning. So the session's objectives today, by the end of this session, I hope that each of the participants here will be able to identify some of the common financial mistakes that we as entrepreneurs usually make as we pursue our business success, and also to understand how these mistakes can limit business growth, because the moment we don't realize that these mistakes are actually happening and put solutions on how to improve, then our businesses will be affected in negative ways, and it may never grow to a point or to a level where we wish to see it. Then also, the session is aimed at making sure that by the end of it, we can learn practical financial management strategies that can help us in our business management. Then also to develop habits that support sustainable business success, because as business owners, as entrepreneurs, our business success is one of our top priorities. Every time we wake up early in the morning, just like someone gave us a prayer here, whenever I wake up early in the morning, the first thing I do is to pray for myself and my family, and also pray for my business success, because I understand how important this business success is to me and to my customers. So before we begin the session, we may need to have these quick questions to ask ourselves in our minds, just rhetoric questions. In your mind, you need to ask yourself, you have been operating that small business for a while now, but do you know your business profit for last month? You could have made so many sales. You could have bought so many goods, and you could have received a lot of money, but do you know actually of that money, what is the real profit? That is a question that you should ask yourself in your mind. Then do you sometimes use business money for personal expenses? That is also a question that you should ask in your mind. Then does your business operate with a monthly budget? That's another question that you should ask. And if the answers to these questions in your mind is a no, then please pay keen attention to this presentation, because it is very ideal for you. So let me try to move this. Why do small businesses remain small? These are some of the common reasons that I have identified through interaction with so many entrepreneurs, and also from my personal experience, because I'm also an entrepreneur running several lines of businesses that I'm growing. And I hope in the next few years they will have grown to a level where every entrepreneur would wish to see. So the first reason is poor financial management. Management of the sources of funds that you're going to use in the business. How do you allocate them in working capital and capital investments? And how do you pay yourself as an entrepreneur who's putting in effort into the business? Then we cash flow management, managing the inflows versus the outflows. The moment there's a mismatch between those two, then automatically the business may not grow to a level you have. Make sure that there's a match between the inflows of the business and the outflows of the business. Then poor record keeping. If your business does not record records of what is happening in the business, then that is a time bomb for the business. And the earlier that it is rectified, then the more the chances that your business is having for survival for a very long time. Then, of course, wrong pricing decisions. How do you determine the price of the business, of the products that you're selling the business, is also an important question. And it is one of the common reasons why businesses have remained small. Lack of planning. You don't have a strategic plan for the year. How are you going to operate? What new things are you going to do? That is also an important aspect. And then poor financial discipline. So I've grouped these reasons and I've categorized them into the mistakes. And we are going to be going through these mistakes to make sure that we can understand them. So the first mistake is mixing business and personal money. I'm very sure this most entrepreneurs have fallen to this temptation. You've made sales, you have some money maybe in your drawer or in your locker, and you are tempted whenever there's an issue to use part of that money to sort that issue, because in your mind you feel like, I will compensate, I will make more money, I will deduct from my own money and put back in the business. But in the end, that does not usually happen. So you find that you are using the business money for personal activities, and this is usually not sustainable for the business. One of the signs of this is, especially for parents, when it is school fees week, when it is tuition week, your child has come home or to your business, has passed by and he needs money, and you wish them to run back very fast to school so that they don't miss out. So you'll find that you're using paying school fees using business cash, so you get some money from the drawer and give to your daughter or your son to rush very fast and pay tuition, but you are forgetting that that was business money, and of that money contains the profits and the original capital that you put in the business. So it is always ideal to replace, especially the capital, but usually which is not done, and which, if continuously done, does not have positive effects on the business. Then if you find yourself buying groceries using business funds, whenever you're going home in the evening, you pick some money, let me go and buy bread for my family, let me buy this and that for the family, I will compensate tomorrow. By the time you know, at the end of the month, a lot of money has been flowing out of the business and it can't even be accounted for, and that, when continued, is not a good practice, because your business will remain small. The money that could have been used to expand does not actually stay in the business. Then unrecorded withdrawals. Whenever you find that each and every time you think about getting money, you withdraw money from the account, or you find yourself withdrawing money from the drawers of your business, then it is a very big mistake. And what will result in is that you will not know the amount of profits you have made, since the money that you are drawing from the business contains both the capital and the profits. So it is always good that you can always leave this money in the business, allow it to accumulate. Then at the end of the month, if you have been keeping good records, take on the profit part and leave the capital in the business to help it sustain itself. And it also leads to cash shortages. By the time you know business is making sales, but you're not seeing any cash. You don't have cash on the account, you don't have cash in the drawer, and you cannot understand what is happening. So that is very common, and you find even some entrepreneurs allow other members, eh, like your son or your employees, to keep uh, using that money. Whenever this one asks for this, go and do it. Pick some money from the drawer. That is a very bad practice that I've also identified as person who has been practicing small business. I've seen that it can be very disastrous. So the best practice is usually to have separate bank accounts, and every evening after work, whether you have made 10,000, whether you have made 100,000, whether you have made 1 million, it is always advisable to bank that money on the business account to avoid having large sums of cash that you may end up misusing, or your employees may end up using, or your daughters or sons may end up misusing. So it is always advisable every evening after you have, depending on the size of your business, after you have made some money, to bank it somewhere where you can see it and know that on my account, this week I've been banking maybe 50,000 every day, and now the 50,000 times maybe 5 days, this is the amount of money that I'm actually having on my account, 250,000. So it helps you to keep that kind of accountability, and whenever you want to withdraw, you'll first give it a second thought to understand whether it is important or not important. Then also it is important to pay yourself a salary. Whenever at the end of the month, whenever that money that you have been banking, please have a portion that you dedicate to yourself, that as part of management of this business, I started it as a profit-making venture so that it can give me also a life that I desire. Have a portion of the profits that you give yourself as salary, and it should be standard, so that you know that at the end of the month, maybe out of my business, I have 1 million as profit. This will help you to cater for the personal needs without interfering or touching the money for the business. So if you can pay yourself a salary, there you will not have to touch the money for the business, because you know this is my money. I can spend it on any personal needs that I wish to fulfill. So that makes your life easy, and will help you to separate this money from any other business money. Then you need to record every withdrawal whenever it happens. Otherwise, at the end of the month, you may find money has been withdrawn, but you don't even remember when you withdrew that money. The next thing that happens, you are blaming your employees, you are blaming everyone, and it is hard to trace how much was withdrawn when. So it is important to record every withdrawal. Have a system where you can, even if it is just a book, buy one counter book. Whenever you withdraw money, write somewhere, I withdrew 10,000 today because of this. I withdrew 20,000 on this date because of this. This will help you to keep accountability, which will make it easy for you to manage finances of the business, and the business, with the time when its finances are being handled the right way, will have no option but to grow. So that brings us to mistake number 2, and I believe you can concur with me as entrepreneurs that in some businesses, though some, because of now attending sessions like this and the exposure, they have embraced good record keeping, and you can see their business are progressing. But those who have not embraced poor record keeping, embraced record keeping, that's why their businesses have remained small. So poor record keeping is one of the mistakes that as entrepreneurs sometimes we do. Maybe because we are busy, or maybe we feel like we can manage the things, but it is always not good to have no records of your business transactions. So this leads to missing records. You'll find yourself having no sales records, you're having no expense records, no inventory, you don't know what is actually in your stores, which gives room for employees or casual laborers to interfere with it, maybe take it through preference. Then customer dates, you give somebody dates, you forget to note down, and by the time you know, you don't even remember the people that you gave credit, or you don't exactly remember the prices that were agreed on, or the money that they are supposed to pay. And once these customers find out, if they are not trustworthy, they find out that you don't have records, some of them may even fail to pay, because even when you go to court, you will not have anywhere to start from. So it is important to know how much did I give on credit to this one, when are they supposed to pay, which means or modes are they supposed to use while paying. And these, the consequences, of course, are usually not good, because it will lead you to making wrong decisions regarding sales and expenses, because you don't have the records. But the records would help you to make decisions because you have information. Usually, most of the times that we are making decisions, we need information that will help us in making this decision. If you make any decision without actually having information, then it could be hard for you. So it could lead to tax challenges. Those whose businesses have grown to a certain level, you know how it is always not easy dealing with the URA people when you don't have records that they can use in assessing you. The reason is that you may end up being over-assessed and given a large tax that you're supposed to pay, and you'll have challenges which could frustrate you as a person and frustrate your business. Then you could have some cash leakages due to undocumented expenses, which that money could have been used to expand maybe the business. Then you may have difficulty in accessing loans, because usually these circles that we borrow from and the commercial banks usually require financial statements to be presented, or financial records to show that this business has actually been existing, it is registered, and it is going to operate as a going concern, to prove if they give these people, if we give this a person a loan, won't they close business tomorrow? So usually they need these records to verify that you have been operating for some time and you are going to keep operating for the near future for you to access these loans. So poor record keeping is one of those mistakes that we cannot overlook. Some people take it for granted, but then it has a dire cost that is usually not appealing. Then mistake number 3 is ignoring cash flows. Yeah, you find you're not matching to know how much is profit, how much revenue have I generated, and how much profit have I generated, and how much cash do I have in the businesses. Because you'll find that many profitable businesses fail because they run out of cash. They forget to know that the revenue you're generating in the business is not amounting to profit, and the profit is not amounting to cash. You may be having a lot of revenue, but when you're not making profit, imagine if you are making a lot of sales, you bought something at 10,000 and you're still selling it at 10,000, and everyone is buying from morning to evening, you are busy selling, but you are not making any profit. And sometimes revenue, remember, it is usually recorded maybe on accrual basis. So you are showing that you have made sales, but there's no cash because you are selling on credit. So by the time you know, you have made so much sales, but there's no cash in the business. And when it is time for buying inventory, paying casual laborers, and catering for those important expenses in the business, you find you are left with no money to cater for them. So that is an important factor to note. This mistake can cost your business, because if you don't watch out how much revenue, you match the revenue with the profit. As I'm making a lot of revenue, let that revenue come with some profit, so that if you bought something at 10,000, at least say it at 12,000, so that you know the 2,000 on each product is a profit. Then also have some cash Don't just sell because you are using accrual basis. You are making so many sales, but most of them are on credit. By the time you know at the end of the day, you have no cash in the business to use. So the tips on how to solve this mistake is to make sure that you monitor the cash inflows and monitor the cash outflows to make sure that there's no mismatch between the two. Because the moment the outflows outmatch the inflows, then your business is going to have a challenge, and the only option you'd have is to run to money lenders, to run to commercial banks, and of course that comes with an extra cost of paying interest, which you would have not incurred if you managed to pay keen attention to your cash flow management and making sure that the inflows and more than the outflows or equal at the worst point. Then it is important to reduce unnecessary credit sales. I know as we usually operate our businesses, we shall have so many people, our friends, our relatives, our acquaintances coming to our businesses to support us, but sometimes they may not have the cash, and due to the relationship that we have with them, we may be or people that have even supported us for a long time. So we may feel the urge to give them goods on credit, but then we should not unnecessarily give credit to everyone that comes in a business. We need to evaluate them using the 5 C's. We need to look at the capital that they have, the collateral that they have given you, so that in case they don't pay, you can take it. Sometimes the collateral could be the trust that you have in them. If you don't trust someone, don't give them goods on credit because it is automatic that they are not going to pay. So you can use collateral, use capacity, because a young man cannot come and say, give me goods worth 50 million on credit, and you just give them. You need to evaluate them and see that according to this person, I think goods of 50 million he may not be able to pay within 1 month, depending on their financial capacity and their earning capacity. So you need to avoid credit sales, because most of we have seen businesses collapsing because a friend took goods on credit, failed to pay. Now they are having court cases, is hiring lawyers. We have seen such cases, and we won't wish entrepreneurs that are moving their businesses towards a good trajectory to be caught up in that mess. Then also you need to follow up with debtors promptly. If you have evaluated some customers and you have found out that these indeed qualify to be given goods on credit, whenever agree on a period when they don't leave it open. Agree on a period when these people are supposed to pay, and make sure when the time reaches and they are supposed to pay, they give them polite reminders. Sometimes they may forget, so give them polite reminders so that they can be able to remit the money, and it helps you to run the business and continue operating successfully. Then another mistake is underpricing products. Some entrepreneurs don't know the right price to sell their products or services on. Or sometimes they know, but due to different factors, depending on where they are operating from, you find them mispricing or underpricing their products intentionally. But this is not good practice, because in the end, it will affect your business's prosperity and success. So you find that why it happens, because some of us entrepreneurs are fearing competition. We're operating in fields that are having so many competitors. For example, me, I have a business that deals in electronics, and where I'm operating from, there are so many other people also dealing the same things. So you find ourselves competing. Even when a customer comes, it is hard for them to say, let me buy from here or buy from here or because we are offering the same products. So due to a fear of competition, one of the members may say, let me sell at a lower price, so that when customers fail to negotiate the prices that are within their range, the other side, they can come and buy from me. But usually that is not sustainable. So you have to understand, to give a price that is not so much and not so low, give the price that is normal. And even when the customers maybe may not come so much, may prefer somebody cheaper, but the truth is that that somebody who's offering the products even cheaper than the real market price is not going to have a sustainable stay. So you sell at the right price and sell genuine products or services, and the price people will always come to buy as long as they know that there is value and the price that you are saying is the right one. Then others, guesswork pricing. Just ask somebody, how much do you sell your products? 10,000. He has not understood why the other person who's dealing in the same business is selling that product or service at 10,000. So from nowhere, you find somebody setting the same price for their products, yet they are operating under different circumstances. So that is usually not good, and it leads to unsustainability. Then some do not know the business costs. You don't know how much you are incurring to running that business. Because usually as entrepreneurs, what we face in a business, the fixed costs are so much. You find yourself paying rent, you find yourself paying water bills, you find yourself paying somebody to be on your business in terms of labor, you find yourself paying electricity bills. I believe those are the most common expenses that every entrepreneur out there faces. So you need to know, how much am I incurring in those fixed costs, and incorporate that cost into the products you're selling, so that when the worst comes to the worst, you can recover all the expenses and the money that you have invested in the business. Even when you don't make a profit, maybe the business is just starting, but at least that business should be able to pay the fixed costs and also the variable cost, and recover the money that's recovering the money that you have put in the business. So the best pricing formula for you to determine the selling price is usually to get the cost of the product or the service, the exact cost that you put in to bring it on board, then the expenses that you have incurred, all those fixed expenses, divide them by the number of products that you are projecting to sell, and distribute them accordingly. Then add the desired profit that you wish to make for the business to be sustainable, and that's the best price that will help you to recover the money you have invested and to even make some profits that you can use as retained earnings to develop the business further. Then mistake number 5 is spending without a budget. It is very disastrous and dangerous for you to operate a business without having a budget. It is always important to have an annual budget for your business, and sometimes scale down to having a monthly budget. Then that monthly budget can be scaled down on a casual basis to have a daily budget of what you wish to achieve. So common overspending areas for most entrepreneurs that I've identified over time is spending in expensive furniture to make sure that your business looks extremely good. It is good to spend on furniture that looks good, but then it shouldn't be so much expensive and luxurious, because sometimes our customers don't actually appreciate some of these things. So you need to get a moderate furniture that gives your business premises a good look, so that you can attract corporate customers, but then it shouldn't be so expensive that you need to break your bank account for you to buy, because furniture is expensive nowadays. And if you don't stick to the budget, you may even find out that furniture that would have cost 20 million, there's also an option of 100 million. So if you don't be careful, you may spend a lot of money and find yourself in a mess. Then, of course, cars, buying expensive cars and maintenance is also affecting businesses, especially the ones that have reached a certain level. Office decor, find out the decorations and find the business, beautifying the business premises. People spend a lot of money on them, and this is money that actually does not bring direct value. The value is in attracting the corporate customers, but it's not so direct. It is indirect. And as entrepreneurs who want to grow our business to a certain level, for the beginning, we may need to invest in things that have a direct impact or bring in a direct income to our safes or our coffers. So we have to be careful with the areas that require a lot of money but don't bring direct benefits. Entertainment, spending a lot of money, entertainment is also usually an overspending area. So it is important that before we cater for these things that bring overspending, we budget for the important things that matter to our businesses. Ladies and gentlemen, we can all agree that marketing is a very important aspect in our business sustainability. So as a matter of fact, we have to make a budget for marketing. It is important that we do not skip it, because if we do not market our products or services, then we may not achieve our objectives. The more you market your product and it reaches more people, the more your chances of making more sales and the more chances of your business growing. Ladies and gentlemen, we can also agree that stock inventory is important. As we are selling, we need to replace the products that we are selling, so that the business keeps on as a going concern. So we need to make a budget. How many tons of products do we need? Or how many items do I need? If me, I'm dealing in electronics, whenever I'm going shopping, I need to plan that this month, depending on the sales that I've made, these are the products that I need to buy so that they replace the other stock, so that I don't strain my finances. So I go to town, buy some things, bring to my shop, and allow the person there to keep running it as I'm doing other things. So I have to know the stock that is in the business, how much stock did I buy, how much is each price, and also monitor it so that it is not wasted and not achieve the business objectives. Staff development, you have to do some staff development for businesses who have more than 2 employees. This is important. You have to train them, team build a team amongst them, and make sure that they have the right skills in how to manage customers, how to manage sales, record keeping, all those, because sometimes he may be somebody may be a good employee, but they are lacking just panel beating to be the best. So you need to give them that kind of arrangement, training that can help them to develop and perform better. Then over borrowing, in the business now, when you start borrowing the first time, it is like a vaccine. You may never stop borrowing, but you have to overgo the temptation. Even sometimes these money lenders will come to you to beg you, please borrow money from us. We lend at this percentage, begging you to take money. But you must know, before I borrow this money, is it important or does it bring value? Borrowing is good, but over borrowing is not good, and as a finance person, I wouldn't recommend it. But for borrowing, which is in the normal sense and the normal structures, then it is okay. So one of the warning signs of over borrowing, if you find yourself borrowing from another source to pay another loan, then that is a red flag, and your business may not lead anywhere. That means you are going to pay a lot of interest. All the profit you are making from the business is actually going back into paying interest, which is not sustainable. If you find yourself having multiple expensive loans, then you are in danger. If you find yourself having long
Hello,
repayment,
Jordan.
yes,
Hello,
please.
Jordan. This is Edith, your host.
Yes,
I'm
doctor.
I'm proposing that you summarize in the next 3 minutes.
Oh, okay. Okay, thank you. So if you find yourself having loan repayments exceeding profits, then that's a red flag. So you need to only borrow if the investments generates income and the cash flow supports the repayments, the cash flow you are generating from the business. Then also ignoring taxes. As a business entrepreneur, you need to know, what taxes am I supposed to be paying? What taxes am I not supposed to be paying? And then after understanding the taxes that you're supposed to be paying as a responsible citizen, then you need to put in effort to make sure that you pay those taxes on time to avoid penalties and avoid having issues with the authorities. Then also another mistake is failing to reinvest the profits that you have made in the business. Whenever we make profits, whatever profits that we've made, we need to have an arrangement where we can divide, and then some of the profits we use them in our business, and some we take them as our salary or as our emolument, so that at least the profits that we have retained in the business help the business to grow. But if you use the profits into luxury items, then you may not have the business growing to a certain level. So we need to make sure we invest in buying better equipment. For example, if you are operating your photography, you need to buy the latest camera so that the quality of the work that you are doing can be appealing to your customers. Invest in marketing, technology, training your staff, and buying new products. Then also another mistake is making decisions without financial information. And this is very important because whenever you're making any decision, you need to have information that will help you to make that decision. So whenever you're doing anything in the business, whenever you're going to pursue something in the business, ask yourself these questions. Can we or can I afford it? If you cannot afford it, please leave it. What is the return? Is it generating a return for the business? If it is not generating a return, then please, it is not advisable to proceed with it. What are the risks involved? If it is a high risk that the business may not achieve the objectives after pursuing it, then it is always advisable to leave it. Then how long before we recover our investment? If I invest now, how many years, how many months, how many days will it take for me to recover the total money that I've invested in this particular investment? So those are the mistakes that we usually make as entrepreneurs, and that have limited our businesses from growing to the levels that we wish to see them on. But if we can rectify based on the strategies that I've shared with you in this 1 hour presentation, then I'm sure within the shortest period of time we'll start seeing positive results happening in our businesses, and we shall be happy that in the near future our business will have reached in the levels that we wish to see. So if you already do this is a small business financial health check as we are concluding our session. If you can tick these boxes, you are separating business money, tick. You are preparing budgets, tick. You are tracking cash flow, tick. Keeping financial records, tick. Saving for emergencies and reviewing business performance monthly. Then I'm very sure you have seen positive changes in your business. And if you have just started, the positive changes are yet to come. And if you are going to start today after this presentation, then I'm telling you that you should expect the best in your business. So I conclude with a small quote that the goal is not just to make money in the business, it is to manage it wisely so that your business can grow sustainably. Ladies and gentlemen, allow me to thank you for being a good audience and coming in to share the knowledge. I therefore conclude my presentation and open the question and answer session. Thank you so much, my audience, and thank you so much, the host, Dr. Edith. You can take over.
Thank you so much. Thank you so much, Mr. Jordan Owomugisha, for making a great presentation. You made a very great presentation, and you've simplified it very well for our audience. It has been so detailed, simple, and to detail. Thank you so much. We appreciate your time. Very, very delicate aspect for us as entrepreneurs. It's very delicate, but you've handled it so well, and I'm sure it's going to help us improve our businesses. Before we go any further, I would like to invite Miss Nora Kisache to handle Q&A. Nora, please.
Thank you very much, Dr. Edith. Thank you very much, our presenter, Mr. Jordan. I was go straight into the Q&A, and we have some questions for you. And one of them is, many businesses don't put customers as their focus and therefore ignore to check on customer feedback. Customers keep withdrawing when they are ignored. Question 2, businesses in Uganda focus on just making profit and therefore bring for us poor quality products. Electronics is a big challenge in that area with many Chinese products which don't last. How can you keep your clients when all they get is poor quality and shady products? Those are the two questions I have so far in our Q&A. Back to you, our presenter.
Thank you so much, Nora, and thank you for the questions that our participants have brought up. The first one was about customer feedback. Ugandans, as business, we don't usually listen to the feedback that our customers give, and this frustrates them and in a way that they feel not cared for. But as entrepreneurs, and we must understand the nature of human beings. Human beings love being listened to, and they love having solutions to their problems. So if a customer has any challenge, I would advise that usually give them a listening ear. Whenever a customer comes with a challenge, maybe with the products that you sold them or with the services, it is always important to give them a listening ear. And even it is important to have records for your customers, and maybe have a visitor's book. Whenever a customer comes and you feel like this customer is the right one, let them have a visitor's book where they can write their details, maybe their email for follow-up, and also write a comment, a small comment on how the business has treated them. You have seen these visitors books in most of the businesses. So whenever you visit, you write your name, why, the reason why you had come, and how you have found a place. If you have found a place not appealing, if maybe you have come to have a service and you have not received the best reception, then you write it so that the manager, because most of the times the problem is not with us, the proprietors, it is most of the times with our employees. For example, me on my businesses, I'm not usually there. There are some employees that I live there. So sometimes I may not know what is happening in the business. So it is important for me to have a feedback mechanism. For me, who's not on ground, to listen to my customers, know what they are going through, and be able to provide solutions. Talk to my employees to see that whenever I'm not around, they can handle customers the way they should handle them, and give them maximum respect, regardless of their status, regardless of the amount of products or services they are buying, regardless of their appearance. Let them give them maximum attention, and make sure that they respect them, so that they can feel attached to the business. And when they feel attached to the business, it's going to be beneficial for us, because they will keep supporting us. Then about the poor quality of products, yes, in the market now, like the electronics, there are various products. If you go, maybe you are selling a charger, they will tell you there's this for 10,000, this for 15, this for 30,000. So when you are talking to your customers, you have to tell them the truth. You want a charger, but I have three options of maybe chargers. There's this one for 10,000. Its quality is not as much as this one for 15,000, as not as this one for 20,000, so that your customer knows. Because it is the customers, what they perceive in mind is what they will go with. It knows by the time I've bought for 20,000, that means I've prioritized quality. If the one for 20,000 does not deliver quality as you've purported, then you may need to make sure that you give back the money to the customer, or make sure that you replace that product, because it is not benefiting value. But a customer who buys the one for 10,000 is aware that this product is for less quality. But what happens, especially with the employees that we may be living in the business, you will sell 10,000 without actually explaining to the customer what exactly the difference between the 10th and the 15, and the 20. So someone, the one of 10 expecting the best, maybe, and it doesn't serve up to the expectations, and then you find your them complaints, and as a business, negative public relations is not good if you wish to grow. So it is important that you explain to your customers the positive side of your products and the negative side of the products, so that you know you match their expectations, so that no one disappoints the other. When you do that, and you make sure that you check your suppliers to make sure that the suppliers that you're dealing with are giving you the best, because there are so many suppliers for different products. But how you choose that this one is the best is also very important for your sustainability. So check your check your suppliers, and also explain to customers the variety of products that you have, and their goods and their bad, so that they are aware and you match their expectations.
Thank you very much, Mr. Owomugisha. I have some comments in the chat. Thank you for the more elaborate mistakes that we do in business. There is one that is similar to many loans we take up, the one of loan top-up. Myself, I'm currently struggling to complete it soon. Yet if I had not done it, I would have completed that loan like 18 months ago. So we should be careful when taking these top-up loans. And also, Silas is saluting you for the powerful presentation. Another question in the Q&A session is, how can I manage cash flows properly? Do I need to employ an account assistant in my small business to manage cash flows? Back to you, our presenter.
Thank you, Nora. Let me quickly answer the question of managing cash flows. The best way to manage cash flows is by knowing them. And that's why we emphasized on making sure that you have records. Each and every day, whenever you sell something, record something small. I've sold this, and this was the price. And even when you are buying something, that means you're spending money. You don't need, when your business, most of us, our business is at a small level and they are growing. So we may not, it may not be ideal for us to hire accountants at this level, because we can manage it with the small knowledge that we have. So you need to record your every small expense, as long as it is business related. Please record it somewhere. Buy a counter book, put expenses, revenue. Whenever you sell something, record and the price. At the end of the day, have a total of the expenses, have a total of the incomes. See how the mismatch. If you find that the expenses are more than the incomes or the revenue, then there's a problem. Go to the next day, and if you find out that in a row of 5 days the expenses have been more than the income consecutively, then there's a problem. So you may need to visit your expenses, find out, what am I exactly spending on. That means by the time the expenses are more than the revenue, what you are spending on is not beneficial to the business, because if it was beneficial, at least it would have helped the revenue to push up and match with the expenses. So whenever we find that in a row of 5 days we're having more expenses than the income, then we go and analyze, what are we spending our money on. After finding out that what we are spending on, then we may need to prioritize. As a business owner, as an entrepreneur, it is very important to learn the art of prioritizing. We have a lot of needs in life. Businesses have a lot of needs, but due to limited resources, we cannot fulfill all the needs at one point. We need to come up with a proper prioritization procedure, where we see the most important expenses, sort them first, then the ones that are not so important, we can give them some time. We can even push them maybe to next year, until the business incomes have grown to a certain level where they can match the expenses. So we need to make sure that we prioritize our expenses so that they can match our income, and make sure that whatever we are spending on is bringing value to help our income increase and generate more funds for the business so that it can grow. So prioritizing is very important, and recording so that you can track and know what am I spending on, what am I earning on, and invest on the things you are earning on. For example, if you have an electronics, you find out that products that are used on a daily basis, chargers and uh, those ones that are used in home, percolators, you'll find that people buy on a regular basis. But you'll find products like televisions and maybe woofers are bought just once in a while. So you need to reduce on your investment on those products that sell once in a while, and instead direct your funds to products that are sold either on a daily basis or regularly. So you may need to invest more money in percolators, chargers, earphones, because those are things that people use every day. But it would not be ideal if you got a lot of business money and bought TVs, which are bought once in a while, and bought woofers, which are bought once in a while. That will tie up your cash, and you will not have any inflows for a long time, which is very disastrous for our business. So that's the best way we can manage our cash inflows so that we can have the best for the business. Nora?
Thank you so much, Mr. Owomugisha. And the last question, because of time, I would just like to read this question, then we can close the Q&A session.
Okay.
Someone is asking, how best can we invest in unit trusts?
Okay. Investing in unit trusts. Okay, thank you. The question for unit trust. It is very easy for someone to invest in unit trust because they are actually, it could act as a very good investment for in a business. Once you, instead of keeping money which you're not going to use for a long time on the business account, you can put it on a unit trust so that it can earn some interest, given that you can withdraw this money at any time, because also it is not usually good to keep money, a lot of money in the business. So unit trust, there are so many companies, especially insurance companies, that are offering these products, but you find that they are offering different interest on the money that you invest. So the one I'm very conversant with, because I've worked there before, is the one for UAP, that is Old Mutual. And the requirements for investing in unit trust are very simple. You need to have a bank statement. Then you need to have a copy of a national ID. You need to have a TIN. And then there's a form that you are supposed to fill those details and attach the bank statement and the copy of the national ID. The minimum investment is just 100,000. And this 100,000, whatever money you invest, it compounds on a daily basis, and you can earn as much as 12% interest per annum on that money. And the good thing about it is that you can withdraw this money anytime you wish. Whenever you feel like there's a need or you need to use the money in a business, you remove the money with the interest that it has accumulated so far. Use it when you get enough money, you again deposit on the account as and when you feel like. So UAP is open. The procedures, you can even do it online as long as you have those requirements and you have those you can raise me. I can send you someone that can help take you through the process, and you just upload them and open yourself an account and start investing and earning some interest in the business whenever, instead of keeping the money idle.
Thank you very much, Mr. Owomugisha. Thank you so much for responding to our Q&A. And because of time, back to you, our host, Dr. Edith. Back to you, Dr. Edith.
Hello. Thank you very much, Madam Nora, for managing the Q&A very well. And I'd like to appreciate our presenter, Mr. Jordan Owomugisha. Thank you so much for bringing this very difficult topic down to us. You've really simplified it. You've made it so detailed, and you have presentation. Would like to appreciate you because many people have learned. When I look in the chat, they're appreciating you very much. We appreciate you. Thank you very much for your time. And I know we'll again invite you to handle another area. Soon we'll be bringing you back. Thank you so much for finding time in your business schedule to accept to make this presentation, most especially when it was at short notice. We are very grateful and we appreciate you. Thank you so much, Jordan. Ladies and gentlemen, allow me on behalf of Makerere University Business School and on behalf of Makerere University Business School Entrepreneurship Innovation and Incubation Center, allow me to appreciate you and to thank you so much for always starting your Thursdays with us. We hope that you have benefited, and we are hopeful that you'll be able to log on again next week on Thursday, same time. We look forward to having you again and learning more from one another. We appreciate you so much. Thank you very much. And we wish you a blessed Thursday. And we hope you'll be able to implement what you've learned from today's session. We'd like to bless you. Bye-bye for now.